All right. Hey, everyone. I suggest to start. Welcome to the third community call dedicated to the Keeper Pool. Thank you for your time and for your involvement. I see familiar names today, and it's pretty cool. Thank you for your continuous participation. And for newcomers, what the Keeper Pool in the first place. Keeper Pool is a new asset class. It's a non-custodial liquidity pool that participates in MakerDAO collateral auctions, gets discounted collateral, and provides a higher interest rate for liquidity providers than other DeFi protocols. And it's a uncorrelated risk, meaning that in a time of high volatility, in a time of market drawback, bot works in a wartime and gets more and more liquidations. But in a peacetime or when the market is in flat mode, capital gains the similar interest rates that other DeFi products. Yeah, and very important part is that this Keeper Pool also acts as a backstop to prevent the situation that was on 12th March. And why we are doing these community calls? We have plans to bootstrap this product as fast as possible, and it's really great to hear the feedback directly from the community to design the product efficiently, securely, and with great user experience, so we can enjoy using it. So thank you for everyone for attending and for other help provided for other community members that are not available here right now, but thank you. As an agenda, I suggest the following. Our team will present the progress we did since the last call. We will present a more detailed architecture. We will share our roadmap and vision. We did a lot of brainstorms and discussions this week, so we have interesting material to share. And then we will discuss how to open questions that we faced this week and the previous, to hear your feedback, your opinion, and your thoughts regarding this. Yeah, and before we start, I see a few newcomers this call. So I suggest if you'd like to make some intro, what are you doing guys here? What's your motivation to join the Keeper Pool, and how you can contribute if you'd like to. There are, I see three newcomers. So Nicholas, would you like to make an intro to the community, what you're doing, why you're here?
Hello.
Hello. Yeah.
Hi. So my name's Nicholas Lombardo. I'm actually a recent grad from Syracuse University in the United States. I've been following MakerDAO and the protocol for a little while now. And I was just really excited about the project, and I wanted to learn more. As I've been exposed, you know, I'm loving everything I hear. I'm just trying to dive as deep as possible, immerse myself into the community. I don't have any traditional like coding backgrounds or any engineering, but I was a economics degree and worked in traditional finance. So I'm just taking a different approach, trying to see what's out there. I think cryptocurrency and this protocol is the future, and I'm excited to be a part of it.
Yeah, thank you. That's great. That's great to have you. All the fields of expertise are welcome, because we are designing a bidding strategy and other parts which requires economic and finance background. So yeah, it's great to have your opinion here. Thank you. Let's move forward. I see 1999 metrics. Would you like to make an intro? Okay, that's okay. And Dominic, would you like to make an intro?
Sure. Hi, it's me, Dominic from Germany. I'm like an IT consultant. Yeah, and for the future, I'm like interested or involved in enterprise connecting projects of Ethereum. And I'm also really interested in investing in or participating in the maker. So that's why I'm inside this call, like to get more about the keeper pool and maybe to participate inside it.
Yeah, that's great. Thank you. Yeah, and before we start, I'd like to make a quick overview who we are and why we are doing this. Basically, the idea arose after the events on 12th March, and behind this idea are Atomica and Protofire teams. Atomica, it's a risk transfer protocol. We are working on a few products for risk transfer and risk mitigation. And Protofire team, we're developing several solutions for MakerDAO and Gnosis ecosystems. Yep, that's pretty it, who we are. So we can proceed through the agenda. And right now I propose to our engineering lead, Elena, to present our low-level architecture and afterwards our roadmap and our long-term vision of this product. Elena, would you like to share us?
Yes, sure. Thank you, Vadim. Let me share my screen. Can you see my screen?
Yep.
Yes.
Okay. These 2 weeks, we actively communicated with the community members, with the DAO community. We started with the gathering feedback, the gathering the pains of community, and we tried to convert these pains into the product requirements, and the architecture can actually solve a lot of problems. And we came up with this 3-layered of architecture. The first layer is a protocol layer, and it includes 2 basic functions. First of all, the DAO governance that makes a lot of decisions around of each product and the protocol itself. And the second, the big component is a pool factory. It's a smart contract which is responsible for the deployment of different types of pools. The second level of protocol is risk markets. Generally, the risk markets can be used for different purposes, but now we are concentrated on building the risk markets for the keepers, and not only for the maker keepers, but also for the DYDX keepers, for the compound keepers. So we're starting with the maker product, but we're thinking how to extend it by adding more products into the keeper's risk market. And the third level is—
Lena, quick question. Why is it a risk market? And could you clarify the keeper pool? What kind of risk is it buying? Like if I deploy capital into this market, right? What is the risk?
Actually, from the first glance, the keepers just need a capital to make the bids on the auctions and get some profit, and for that it's enough to have a liquidity pool. But the keepers making the bidding on the auctions, it's the action which actually contains inside a lot of different risks. First of all, the gas cost. The second one, there are different types of bidder that can be more successful than the current keeper. Third option, the different bidding strategies can be used.
Mm-hmm.
And all these, I would say, ingredients make make actually the work of keeper. It's a kind of set of risks that can be transferred by using the risk markets.
Okay, understood. Well, to me, the risk that I'm buying is the risk of volatility. So I effectively assume that, okay, if volatility is low, there will be no liquidations happening, no auctions, and or very little, and the liquidation penalties in the form of this discounted collateral bought and sold, right? That won't be enough of that. So if I participate in this keeper's pool, right, effectively the risk that I'm taking is that the risk of very low volatility, and if the volatility is high, I profit from it through the liquidations that the pool participates. Is that correct?
Yeah, that's correct. But there is one component which allows you to get profit not only when the liquidation will take place, but also to get some kind of profit by employing the possibilities of asset manager component.
Mm-hmm.
But
okay,
the
so
main
kind
goal,
of like
yes.
there is like an operational profit to be had if there are liquidations that are won with a good margin, right? And if there is no operational income, then there will be investment income from deploying assets into yielding opportunities like DSR compound, right?
Yeah, exactly.
Okay.
That's what we described previously as a peacetime and wartime. So when there is wartime and there are a lot of liquidation, the liquidity providers who deploy the capital to the pool will get profit from this liquidation. In the peacetime, they can have some yield, which actually provided by the asset manager work.
Okay, got it. Let's continue. Thank you.
Okay, and we also thinking about the global liquidity pool. For these early phases, it's probably not available, but actually probably needed to diversify the different types of risks. Let's look at the third level of architecture, the product level, because it's the most interesting and it's a subject of the first phase of development. Here we see the following components. There is a pool, there is an asset manager, and there are different types of adapters. On the previous call, one of our developers, Konstantin, presented the pluggable architecture of the pool when we can plug the different types of adapters which will play the different roles in the product implementation. Let's look at these adapters. The first type of adapter that we use, that's product adapter, which contains the biggest part of business logic. It's keeper itself. That's a smart contract which is deployed on blockchain to the blockchain, and this contract contains the settings defined by community and approved by DAO. And this keeper adapter is responsible for getting the profit in the wartime. We consider that pool can have only one product adapter, but technically it's possible to connect more than one product adapter to the pool. The second type of adapter that can be connected to the pool is a special purpose pool or pool adapter. The special purpose pool, that's the interesting concept, which allows the product to implement the specific functions that needed to make work of the product is more efficient. It could be the gas pool. The gas pool can actually help to manage help to compensate the gas for the keeper, and help to compensate the gas for the asset manager. It could be a sponsor pool. For example, some of the platforms like Maker or DeFi would like to provide the sponsor capital with zero yield, and the sponsor pool can contain these non-profit assets actually in a separate basket. It's possible to connect more than one special purpose pool to the main liquidity pool. And the behavior and the settings of the special purpose pool are also defined by DAO governance. And the third type of adapter is connected and communicated with the asset manager. The asset manager could be built as a separate component, or could be built as a part of a liquidity pool. Deposit asset manager actually works with deposit adapters, which place the capital in the peacetime to try to compound on any platforms according to the strategy which is defined and approved by DAO governance. We think that product adapters cannot live without the oracles which provide the information, the needed information for their efficient work. In our case, the risk oracle watches the maker auctions. The risk oracle also can monitor the gas prices and provide the information needed for the keeper adapter to put the efficient bids. And the risk oracle can track the status of mempool and provide some front-running functionality for the keeper adapter. So that's what we have in mind when we talk about the risk oracle. And of course, one keeper adapter can connect to more than one risk oracle. That's how the product level look like. And here I'd like to stop and ask, probably you have some questions or comments or improvements. Please go ahead, because then I'm going to focus on our roadmap and how we are going to make this architecture live.
I have a question. The risk oracles, right?
Yeah.
What are the, are you describing in this architecture that there will be a number of risk oracles used by one keeper pool, or there will be multiple? Let's say there is a keeper pool deploying strategy, right? Number one. Actually, I have two questions. Question number one, is it one strategy per pool or multiple strategies per pool? Now, let's address that first, because that will clear up things a bit.
If you speak about the bidding strategy, actually is in the product adapter, is on chain, and Risk Oracle just adds some necessary data to tune this strategy and to make it live.
But
So
the
if you
keeper
would
adapter, is it one strategy? Let's say we heard from Seed that there are probably a handful of strategies that need to be deployed for various market conditions, for various hypothesis, right? Investment thesis, right? In the operational profit taking from the liquidation operations, right? So is it will there be one strategy per pool or multiple strategies per pool?
First of all, let's define what is strategy. The strategy can be a number of scenarios which work on particular conditions. And in this case, in one product adapter, we can implement a number of scenarios which are available for the product adapter and which will depend on the current state of auctions. If we speak about the radically new strategy, it's possible to go two ways. The first way is update the bidding strategy as a setting using the decentralized governance. And the second way is to deploy a new adapter with absolutely new strategy and connect to the current pool or connect with a new one.
Okay, so if we connect a new strategy to a current pool, that means that the pool may have more than one strategy.
Exactly.
Okay. All right, got it. So, and well, to answer your question, what is the strategy? What defines the strategy? It's a number of parameters that are different from parameters that that would be activated should we choose a different hypothesis for operations. For example, one strategy could be to try to catch collateral at a deep discount, right? It's likely to not happen very often, right? But effectively to minimize number of bidding operations, right? And just participate when there is an opportunity to have basically maximizing the discount, right? That we obtain the collateral for. Another one would be to maximize the win ratio by let's say bidding in the very last moment, right? Like try to perfect the this last bid kind of speed with which you go ahead and try to front run using your technological prowess, right? Ability to monitor mempool and so on. And in this case, the parameters might be completely different, and it's not possible to just to do both, right? Sometimes you just need to do one or another. So this would be my definition of strategy, something that is completely different, that where we basically, what makes the strategies different is that capital allocation is not possible for to be simultaneously in both. Basically, the DAI in Watt, right? You only have one X of that DAI, and once you submit that bid and submit another, you cannot submit, like if I understand correctly, you cannot participate in number of auctions simultaneously using just the same collateral. You just use it for 100 different strategies. Am I wrong with this? Basically, here's the question. Does the capital in VAT, once you submit a bid, is it locked? Or is it available? Can you basically use the same capital for another bid using some other parameters? Can someone answer that question?
Yes, it's locked.
Is okay. So that's kind of this competition for capital.
But well, actually, you can front run, apply the two strategies, and front run if it is not your bid, which is the last one.
Could you elaborate?
So you,
yeah, you can.
yes, you apply the first. Like say, okay, I apply this
Mm-hmm.
bid,
Mm-hmm.
which optimizes the profit,
Mm-hmm.
and somebody applies another bid.
Mm-hmm.
So that strategy will die there. And if you want to increase the winning ratio in exchange of profit by front running the last bid, you can also apply that same strategy with the same BAT, the same capital. Given that you lost your bid, you can redeploy that capital and say, okay, I'm applying this strategy if the bid is not my own.
Okay.
This is saying,
So
once you're outbid, the capital clears up from your initial bid. You don't need to have, if you want to put in another bid, outbidding the person who outbid you, you don't have to have like double the capital. You can use it from the initial bid.
Yeah, my question is, you place a bid, somebody outbidded you, so you're losing. You can use the same capital to create another bid. Is that correct?
Well, maybe there is a way to submit one multi-step in one block, multiple transactions, like cancel that bid and do another one, right? But what I'm saying is that, and that is totally fine for strategy. What I'm saying is that you cannot deploy the same capital in multiple strategies where capital is deployed at the same time.
Yeah, I mean, I guess both are relevant. I mean, it's a good question for whether or not we want to support a two-bid system, because if you're a multiple bid system, because if you're anytime, if you do have to have double the capital available, it's much less capital efficient, right? If you get outbid, then you have to have even more capital to put in another bid. I don't know, Kostya, do you know if when you are outbid, you can use the same assets from your VAT that were used for the initial bid for a second bid?
In other words, is the lock on the capital in VAT automatically gets removed as soon as someone bids higher or not?
Yep, so I don't think canceling bids is supported. I don't know why it would be, because that would add problems, right? If you're like the highest bid and then cancel, and then
yeah, I understand that it's the question is the VAT lock gets automatically removed for bidders, for all bidders except the highest, or not?
Yes, that's it. That works absolutely that way. So if your bid it's not a candidate to win, the capital is unlocked. But what we can do additionally to that, we can use the multi-threading. So we can have more than one instance of the keeper which can make the bids, and we can deploy more capital, and we can participate simultaneously on many auctions. So that's possible to scale these keepers by adding separate instances, or they use this maker feature when your bid is not a candidate to win, your capital is unlocked, and you can start bidding.
Okay. All right. We had questions from 199 Matrix. Can you cancel your first bid or not?
Cancel the first bid when you made it. Actually,
when can you cancel? Where can you not cancel? Like, for example, probably you cannot cancel if you're currently the highest bidder. Or
you
can
cannot
you?
cancel, and if you're not highest, it doesn't make any sense because your capital is unlocked.
Yeah, guys. What is locked? Only the current bid is locked, and when somebody outbid your bid is released.
Okay, so it's automatically canceled when someone outbids you, right? And once you submit it, you cannot cancel it until
Yes.
someone outbids you, right?
If it's the current bid, winning bid, you're not able to cancel it.
Okay, got it. All right.
Yeah, so you can have several strategies, chain it, and when you say, okay, this strategy will have a trigger condition and a do not trigger condition, move to the next strategy. So that probably can make sense.
Okay. Yes. All right. Next question here in the chat: why is there also a time frame for the bid? Well, I guess there is a duration of the auction, right? And if you're asking about that, that is set in order for keepers to have enough time to submit their transactions, to make decisions, and so on. So it recently has been increased to I think 6 hours, during which the collateral is being auctioned, and that was made. This increase, I think, from 1 hour to 6 hours was to mitigate. It's like a short-term fix to a problem which we had on March 12th, where keepers couldn't act fast enough, couldn't bring liquidity back into the system, and that depleted number of keepers participating in auctions. So increasing this time frame to 6 hours mitigates this problem, allowing more time for keepers to come in. At the same time, it adds a little bit more risk to the entire system, because within 6 hours, if there is a big drop in price, the system has a much greater chance of becoming under collateralized, where even when there is enough competition for your collateral, the price is still lower than the debt. So if, let's say, you borrowed 100 Dai, right, and you had 2 Ether in the system, if the price drops to let's say 105, you get triggered for liquidation, then 6 hours kick in, right? And then if the price drops even further within the 6 hours, right, and let's say it's $30 per ETH, right? Even if there is perfect competition, it will be bought for, let's say your 2 Ether will be bought for something like 50, 55 Dai, right? While your debt is 100, right? And that difference will be added to the negative surplus, which will trigger the maker token being minted to and sold at the flop auctions that will then recoup for losses. So I believe that the auction system will be experiencing a lot of changes and improvements over the next few months. So we should probably consider that while we do this design and architecture, so that we don't hard code a lot of logic that is specific to how auctions are designed, so that if there is an upgrade of MCD collateral auction systems, right, the keeper pool will keep functioning with little to no modifications to the main contracts. Does it make sense?
Yeah, so we have 2 periods, bid period and total auction length period. And when the auction is finalized, what comes first, bid period or auction period? And currently 6 hours.
Okay, and the last question was why not just bid at the same time? I think there will be one strategy, for example, that I would I could deploy, or I would be interested in deploying or proposing, is a strategy of monitoring keepers and determining those who have a very good strategy, right? And just copy and just jump with them, right? And try to get a piece of the action that they're having, right? And that would require basically a mempool risk oracle that we plan to build, right? And some I guess voting on what which keepers do we want to tag along with, right? Okay, let's continue. Diana, please go ahead.
Yeah, actually, that's all about architecture that I'd like to present today. And probably we can get more comments after the call. Today, please feel free to share your questions in the chat. This architecture is shared in the our LiquidDAO document. It's available. So you can put the comments here or in the community chat. We'll be glad to answer. And the second part of my presentation is the roadmap that we created for the next month. And let me present it. And also, it would be great if you share your thoughts about that. We started with the phase 0, and it's close to end. And the main goals for the 0 phase is to define the first keeper settings, the bidding strategy. We have the draft of it, and I believe John can give more information about that. We specify the first pool settings. The currency of the first pool will be DAI. Rebalancing strategy, the pool limits, and emergency shutdown rules. Also, we agreed about the DAO structure, the version 1.0, and we assume that the DAO 1.0 will contain some centralized functions, will work with the admin account, but it's only for the first phase, it's only for the first 4 weeks. So the phase 1 is about building the MVP of Maker Keeper pool, and it will be a one currency liquidity pool which is connected with one keeper contract with predefined bidding strategy. So we are going to use one for the first phase and then extend by additional bidding strategies. We're also going to build the simple asset manager with 1 or 2 deposit adapters and predefined rebalancing strategy. As I said before, the governance for the phase 1 will be pretty simple and will contain some centralized parts. But we are going to add 48 hours delay of admin actions just to add some security, even for these first 4 weeks. Then the simple monitoring oracle, and on the first phase, it will contain mostly 2 features, the maker auctions monitoring and the gas price monitoring. The monitoring of mempool will be the subject of the phase 2. A liquidity provider user interface, that's just a simple interface which allows the liquidity providers to buy the pool tokens on exchange on their assets. we are going to build the simple dashboard to track the auctions and, of course, the user documentation. And if we go back to the architecture, what we are going to build on the phase 1, the MVP of this part, the maker keeper pool. Let's look at the phase 2, which can take 6 weeks, when we are going to extend this product to a real keeper risk market. So we are building not only one product, but more than one product and extend it to the risk market. And of course, we need these protocol features like a pool factory, like the full decentralized DAO governance, and we need additional products on our market, like DYDX. So the objects of the second phase to add more keepers for the other platforms like DYDX and Compound, extend the functionality of monitoring Oracle, and add such features like as a front-running mempool, the sharding support, add fully decentralized governance, and improve the asset manager, which can work with more than a couple of deposit adapters and which can implement the more comprehensive investment strategy that on phase 1. The third phase is under discussion, so feel free to provide your ideas as well as for the first 2 phases.
Okay.
Yeah, maybe there are questions regarding features and of this product. So yeah, feel free to ask, to provide maybe your desires, ideas. So yeah. Okay, if
Yes, question.
Yeah, sure.
When is expected to have the keeper running?
The first keeper for the maker pool will be up and running in 4 weeks.
That is the outcome of phase 1.
Yeah, sorry, a little bit split.
And for that to happen, what is the plan to deploy full nodes, to use some third-party nodes?
We are going at the first phase use to deploy our node, the only one, and then we will track the performance and see if we really need more than one, and we really need to scale it and add more.
Thank you.
One question. What are the main constraints that make this timeline 4 weeks instead of 2 weeks? Which of these items take the longest or cannot even be started, right? Why can't we have something MVP in 2 weeks?
Okay, let's start with the components that we are going to use. First of all, the keeper contract as an adapter, it's pretty simple, but the bidding strategy needs to be tested, needs to be modeled, and that's, I would say, the time-consuming task to not to implement the bidding strategy, but to test it and to see the outcomes of this bidding strategy.
Okay.
That's the first time-consuming task that we have now. The second time-consuming task is asset manager with deposit adapters. A deposit adapter, it's a kind of interface which allows to work with the different DeFi platforms to place their assets and to take these assets back when the keeper needs them for bidding. Just imagine that the part of the assets in compound, the part of the assets in chai, the part of the assets is somewhere else, and the keeper goes to the pool and asks for the funds for bidding. And the pool, the asset manager, should collect all these assets from different platforms using a particular logic, make it quickly, efficiently, and preferably in one transaction. And for each platform that we are going to communicate through deposit adapters, we need a separate deposit adapter, that a code that should be written, tested, and then deployed. That's the second
as an MVP, can we start with just DSR?
Yeah, we can start. Yeah, actually, if we simplify, I would say if we simplify the bidding strategy and make the tests quickly, if we simplify the asset manager, or just we'll hold the assets in the pool, or we will use just the DSR as the only source, the only place when we can put the assets during the peacetime, yeah, the phase one will be much simpler, because the rest, liquidity pool, it's pretty simple. It's no more than 4 generalized methods. The risk oracle for the first phase also is not a problem, as well as the user interface. But these two parts actually some time consuming. That's what we have right now.
Okay, one question. Because the triage of the availability will go through testnet first, right? Is it possible to, for example, what do you guys think about possibility of splitting phase one into 2 pieces, with one culminating with deployment of the MVP, except for the final bidding strategy, and the asset manager with UI and testnet contracts, right? And that, let's say, I don't know, 2 weeks, and then in 2 weeks to finalize these constraining items which you indicated, the bidding strategy and the asset manager. And if we're talking about the first the phase 1.1, right? Like if it's feasible in 2 weeks, then we can probably have no asset manager, right? No rebalancing, just DAI, put DAI in, it doesn't earn anything, right? And then in the 2 weeks following that, this will be added. And the same thing with the bidding strategy. The one that will be deployed on testnet will be just very simple, no expectation that it's actually will be profitable also, right? But at least it will be there and working. At least we can get, I don't know, some simulations done and determine how we're actually going to simulate in the first place, right? What exactly we're going to measure, how to do it, and what inputs do we seek from the community on tuning the bidding strategy.
Yes, I will also agree that, I don't know, I would like to know how we can MPP this by either simulated or winning auctions. I will participate with capital, and I don't care to get passive income or whatever that we know that can be implemented. But what we don't know is that if we're going to be able to win actual auctions.
Let me answer, Renat. Actually, we are particularly going the way you described, and the liquidity pool methods already implemented. So we start prototyping, and even there are some decisions that should be made that are related to the phase 0. We are started building and prototyping the features from the phase 1. So I would say that we can go with short iterations. And if you speak about testnet, of course, the parts of functionality can be delivered every 2 weeks. That's absolutely possible. And answering about the asset manager and the bidding strategy, of course, the bidding strategy is the main goal, and the asset manager features have less priority than building the efficient bidding strategy and check it.
Mm-hmm.
Yeah, as for the bidding strategy, it's a very good question. How we can be sure that our strategy is profitable, right? And as for this, we're creating right now a few rough strategies with exact numbers, and we're thinking how we can make a simulation or to build a model initially, or we will just starting testing how our bot participates in this auction. But that was a good question. So if you maybe, yeah.
I prefer to start make this test using the historical data before we start really bidding on the auctions. So we should prove this hypothesis before we go to the mainnet. Because you see that the bidding strategy is a part of the keeper adapter smart contract, and if you deploy it, then we should think what to do with that. Deploy a new keeper contract, or should about upgradability of the contract, which certainly not the goal of the phase 2. So I would say that the better way is to start working with the historical data and to check the business strategies using this historical data.
Okay. All right. So if possible to split it into 2 and basically have a 2-week cycles, that would be great. Otherwise, looks great.
Okay, maybe any other questions to Elena?
Hello, guys. Can you hear me?
Yeah,
Yes.
yeah.
I have a kind of provocative question. Do you have a secret weapon strategy for the last bit? I mean, like alien flying saucer strategy, because I have talked with several experienced programmers among keepers, and no one of them ever won an auction recently. And what I'm trying to say is that you will face tremendous competition. And what I see here is that you're going to win mostly sharp falls. One ether is going to fall sharply. And what I see is that when you have a 6-hour time frame for an auction, let's imagine this situation. Nobody is bidding. Everybody is waiting for the last bid. And let's say you won the last bid, and after that moment the ether falls further below. What are you going to do with this ether? Are you going to hold it
No, we're going to we're going to sell it, and but that's a very good question. There are two things I could comment here. Is the very reason why we think, at least, and many in the community think that this keeper pool approach will be more successful than individual keepers, is because of the economy of scale and the total amount of assets that it can deploy. We have one of the individuals in our community who ran a keeper in the period of volatility, right?
You mean the 12th?
3 weeks ago,
12th
yeah.
of March?
And he said that, well, the number of auctions, percentage of auctions that they were able to win was relatively small. And even when they added capital, significant amounts of capital, they started, they could compete at much better pace, right? And there are two things that he mentioned. Number one is that they stopped running the keeper bots recently because it takes a significant amount of efforts to run the keepers, right, and have a decent infrastructure. You need to invest a lot into creating very elaborate ways to monitor mempool and so on, and pricing and do liquidations, right? So there is a fixed cost that at this time is relatively big and high in R&D. It's not just servers, right?
Do you have exact figures? I mean,
well, he basically like several servers, high performance machines that cost $1,500 per month each. And of course, with the good DevOps skills, you can optimize it, right? But it's never going to be zero. But most importantly is that you need to have a significant amount of capital to participate in bids, and for some strategies, there will be capital intensive, meaning that unless you have $1 million or $2 million worth of DAI in the pool, right, you're not competitive. And they were increasing the amounts of DAI they were working with, so they went up to 1 million DAI. So 100,000 to 500,000, sometimes it was 1 million and more. That's the reality of how much capital you need. It doesn't mean that you cannot win something, right? But combined together, all of the things have probably resulted in this, at least at this time. Understanding is that you need to have mature infrastructure, keep investing in it, develop unfair competitive advantage.
Okay, I've got your point.
That are technology driven, and then you need capital. So, and if you are to allocate capital as an investor to these liquidation market makers, right? Even if some of them accept third-party capital to manage, right? That will cost at least 220, like a hedge fund, right? 2% annual fee and 20% of all the profits, right? So combined together, all of these factors, at least there are some legs to it. We don't know, maybe it won't be competitive, won't be profitable. Maybe there will be some magical keepers that just can operate with spreads because they just need to buy Ether anyway, right? And they use the keeper bot strategy as a way to acquire ETH because they're accumulating, right? And they're not selling it. These kind of actors may have an advantage, right? Because they don't need to sell, liquidate, return. They just buy at slight discount. That's better, right?
I was thinking about the other extreme. Just imagine for a moment, you've got so big, you've got like $200 million to deploy into this strategy, and you've become so large a whale that you face a liquidity problem. I mean, the amount of auctions.
What are you worried about? Just the? Are you worried about the actual return?
Can you repeat the question?
When you say basically it's the problem you describe is like you got so big, is basically, are you saying that there is way more capital than liquidations and it goes on for long periods of time, right? Well, then it means peacetime. Then what you do is through governance, you advocate, okay, I want to deploy capital to this high yield opportunity, right? And that yields 7%, or let's do 30% here, 50% there, right? You have always a choice of exiting, right? And hopefully at some point in one of the future releases, we will come up with a way to run your own strategy where you can allocate funds as you wish, right? And maybe even run your private strategy. So market will tell if the, but I don't expect that the returns from liquidations will become so low that it's kind of not a good allocation for the following reason. For two reasons. Reason number one, actually for three reasons. Reason number one is that the returns in DeFi, right, they're typically higher than the off-chain assets, very simply because there are risks associated with contracts, right, with custody of the funds in this non-custodial contract that may be hacked and so on, right? So that that in general is characteristic that is true about all of the DeFi projects, be it compound, right, yield on USDC versus interest that you get in a bank or some other asset or risk type like this liquidation volatility risk, right? The second reason is that the source of yield here that is differentiated is a new asset class that is different than borrowing and lending, right? The spread between cost of capital available, right, to the people who, let's say, borrow USDC, US dollars at, let's say, 1%, right, and lend it at 4%, and there is more capital available. The source of yield here is the volatility, right? Liquidations themselves. And that is differentiated source of yield, and that is the asset class that makes it uncorrelated, meaning that a fund or an individual, if you deploy funds into just go long Ether, right? Your performance, let's say Ether drops by 30%, right? Your net asset value is minus 30, right? If you have capital that you deploy in the keeper strategy performing liquidations, right? Your drop may be minus 20, which gives you an advantage over other fund managers, right?
But what are you going to do when the Ether will go up?
That's fine. Well, it's
well, that's the to back to like Elena's structure. There's an asset manager component, so that'll be up to, you know, different strategies can be designed. And I think a lot of this comes down to how do people view this as an allocation in their portfolio, right? I mean, you can just have this as something where you have an existing set of DAI that you were going to set aside, and you think this is a good way to get good yield on that DAI. And you know, I think at default, we'll at least put the DAI in the DSR. But if new asset manager kind of strategies want to be created, where either it allocates some to a token set, or maybe either does some action similar to a token set where it adjusts the allocations in the pool, programmatically in some manner, that can be a way to have maybe bring in more contribution, because people can see it as a larger portion of how they want to allocate their portfolio. So we'll just have to see, which way is most, as you do that, people have very different opinions about how they manage their own portfolio. So the more that you put logic on top of the assets being managed there, you might scare some people away that don't want assets managed that way, that they want to have more control and they'd rather have it just do DAI. So the structure is there to build that for phase 0, the initial launch. It'll just be DSR to at least cover that yield. And then we'll have to kind of see how people want to, what things we might want to build to, make people comfortable putting more of their portfolio into it, and to capture more non-keeper yield.
Yeah, and finally, the third reason. So what how I would paraphrase what John said is that the return that you can have on ETH on DAI outside of collateral liquidations, right? It's out of scope. It's basically, it's not something, we're not building a pool to maximize return on DAI from lending, right? This completely is outsourced. If there are ways to deploy capital programmatically in a non-custodial way, great. We will allow the pool to be programmed so that if there is some yield available on it, great. You can send it there. Where it's out of scope, right? If there is a new way to deploy ETH, we'll just plug it in, right? If it's available. If it's not available, then you have a choice of, okay, putting the assets in the pool and waiting for the volatility to happen, or keep it in your ledger and just bring it to the pool whenever volatility happens, right? So that's kind of how I would describe it. It's basically the asset class is not returns on ETH or DAI from lending. It's the asset class is volatility harvested in the form of liquidations, right, and collateral auctions. And third and final piece, why I think there are legs to long-term competitiveness of the keeper pool is the fact that the number of assets that are liquidatable with incentives increased by 10x just in the past 12 months, right? And that will only accelerate. We will have 500 assets in just 5 years, right? Even with the current pace, maybe 1,000, right? And that means that the liquidation strategy would not be based on you maximizing value on your DAI or ETH. You will be maximizing value on, I don't know, real estate tokens that you hold. Things like that. So these are the three elements why I think this pooling mechanism for new asset classes, for liquidations and volatility as an asset class is has its legs because it's uncorrelated and the source of yield is completely different than alternatives.
Rinat, earlier on you were talking about the 20% hedge fund fees. Are you going to implement this?
No, for now we don't plan to have any fees. We're not building a hedge fund. We're building software. So if people could build that themselves, right, and find ways to make money, that will be amazing. If others can make money.
Yeah, I mean, there's a lot of different things that can be done here with it being pretty extensible. People can manage their own allocations to the pool using our oracles or others if they want to, deposit more DAI in certain times. There are a lot of parallels to what we're building to what is built over at Set, where you kind of have, they have their social trading sets. So there could be a world where, as part of their strategies, we make it available where they could contribute Dai directly to our pools, you know, that they can then hold some tokens there and manage their allocations that way. And then, you know, that's offloading some more of the asset management component to that. So we can, you know, there's different things that we get done, but for the first, you know, it is something that we're thinking about, that we're building for, and for the first iteration.
Yeah, and if someone like Andrew, if you are interested in building the first managed keeper pool, right, where strategy is your intellectual property, right? We have these in the not very long-term roadmap, but it's becoming much easier to implement now. At least like 2 years ago, a year ago, it was very hard technologically. Right now, there is much more building blocks that could be used for that, and some of the technical problems are now have been solved in the past 6 months. And if you would like to earn 220 for managing your own strategy, right? We certainly would love to make it happen. Okay. Next item on the agenda.
Yeah, we can go through agenda. Thank you, Elena, for sharing. We will share all the stuff with community, so you can, if you don't have any comments or ideas right now, you can add them later. And yeah, let's move forward. Also, we discovered interesting and very important risk as an Oracle risk, and we did some preliminary research on this topic. So we have a table with current issues of the Oracle, and it is necessary to discover this topic comprehensively, so we can design our Oracle, not our Oracle, but our communication with Oracle efficiently. So Renat, can you elaborate on this type of risk and what we have?
Yes. Do you see my screen?
Yeah.
Okay. So since last week, I have added a new section into the risk management framework. I would like to drill down into the risks and problems associated with oracles used by Maker Multi-Collateral Dai system and the MCD keepers. This work will help us not only better understand the source of competitive advantage for the keeper system when it comes to using oracles, specific ones, or in a way that has some barrier to entry, right? Technical costs, ongoing costs, and to better configure the trading strategies and overall mitigate the risks associated with things like what happens if the price drops so fast, where you acquired, like Andrew asked the question, I think, if you bought collateral, if you bought Ether, let's say 115, but now the price is 95, right? And you acquired it with like 5% discount. Like, what do you do? Do you keep it? Do you sell it, right? So these are, this is exactly what could be improved from this work. The question here is basically, what do you guys see? What have you seen when it comes to oracles used by keepers or used by MCD system, the existing price feeds? What are the main problems? Where can we learn from it? Or maybe you experienced it yourself, right? What are the negative impact risk? And who is the affected party? Not necessarily maybe the keeper affected, right? It might be the MCD system or maker holders. I have put in here a few that I was able to find. Number one is that the MCD system did not receive timely signals whom to liquidate, and when this signal arrived, right, it became basically too late. And this is the chart right here. Let me put it in a separate screen here. So that you guys can see. This is the price reported by Oracle, the price feed of MCD. It's not necessarily the one that the keeper would use, right? But it affects the signaling which are the vaults that can be actually bid on, right? And we can see here that the Oracle price is extremely like rigid, right? It's not very smooth, right? And you can see that liquidations were happening as soon as the price dropped, but there were no liquidations right here in this period, right? And because there will be more and more assets which change price in a different way than ETH, right? This problem will become greater. The question is, are there any issues that you're seeing, right, with price feeds that we should know about? Not even if the MCD is the affected party, right? Okay, maybe you guys can answer this question. Is it true that V2 price feeds update once an hour? Is it still the case?
Yes, Maker Oracle updates the price once an hour. So during this hour, they get prices from a bunch of feeds, then calculate the medium price, and then this medium price is applied to the system. It happens once an hour. Okay,
and when the price is updated and some walls become under collateralized below 150, right? What happens? The bytes, do the bytes happen in MCD the same way they were happening in single collateral Dai? Basically, someone need to byte it and mark it up for liquidation, right? So that the 1 hour delay kicks in, after which it could be auctioned, or it's different now?
Yeah, so there is a special contract with the name CAT. So this CAT contract is able to byte some part of collateral during this hour if the requirements are met. So under collateralized.
And this CAT can, let's say the price just came in, right? And we have 10 volts that are under collateralized according to this price, right? If you calculate there, right? Do they calculate the collateralization on chain?
Yes.
For all of the volts?
Yes.
Okay, so there is something like a state of, okay, here's the under collateralized volts, right?
Yeah, so there is a function that could be used to grab some amount of collateral from the CDP, and if keeper invokes this function, there will be a check on chain check using this price. If this collateral is under collateralized, so if it's possible to take some part of this collateral.
Okay, understood. So, and if the contract verifies, okay, yes, indeed, this invocation is legitimate, right?
Yes.
That happens. When does the 1 hour delay kicks in? Is it you have 1 hour to invoke this, right? Is it correct?
You can invoke it at any time. So this verification happens when this transaction comes on particular block. So it happens at the time of invocation.
Oh, okay, and so let's say I, as a keeper, invoke this function. The contract checks whether my invocation is legit, and if it's legit, it then authorizes, approves this, make this vault eligible, or a portion of this vault eligible for auctioning, right?
Yes.
Okay, and then 1 hour, when does it start? When does it end?
Well, I can answer. Well, actually, there are two prices, the current one and the next one. And the next one is become available 1 hour before. And it can be changed if, for example, some oracles make some mistakes or some, it can be adjusted. But once the hour is passed, one method can be called to switch, let's say, current will go away price and the next one will become new price. This is
And 1 hour, when does it start ticking?
Well, 1 hour is once the new price is set for a pricing contract. And when the next price became current one, well, as Konstantin said, anyone can call CAT contract to buy walls.
Okay, and 1 hour is that how often the price feeds report, or 1 hour is an arbitrary number that allows basically the time for people to invoke the CAT, or it's the amount of time between invocation and the start of the auction? What is 1 hour, this delay, what is it about?
Well, once again, when new price is not applied immediately. New price is set to a special, let's say, variable new price, and everyone can check it, but it is not applied, and no one can call byte method and liquidate walls. Well,
immediately, or there is either a delay of 1 hour between collateral becoming, between the wall becoming under collateralized and the auction start? Is there a delay?
Well,
if yes, is it 1 hour?
Well, there are no delay. Once a new price that is become available, once it became current, well, actually there are two variables, current and new. Once new became current, after this, we can call byte and start liquidation of walls.
And it can start immediately, no auction, 6 hour auction starts?
Yes, we can start
auction, yeah.
So there is no 1 hour delay of any kind?
In this way, yes.
Interesting. Mariano, I remember last February at Denver, he mentioned there is 1 hour delay.
Yes, because you know what price will be the next price.
So there is no delay, or there is a delay?
Could you explain
you always
what
know
you mean by delay?
Delay, I'm trying to understand, is it true that there is 1 hour delay between the time when the collateral, the vault, becomes, let's say, 145%, right, collateralized, and the moment when the auction starts, when bids can start to come in?
No, there are no delays. Once it becomes under-collateralized,
it seems that there is a delay. There is the documentation, but well, once that your vault becomes risky, you have up to 1 hour to get back to the safe area.
Okay. Anyway, that does not. The only implication here is that and the question I have right now is basically, let's assume there is such delay, 1 hour. I would like to understand if it has anything to do with feeds being updated once an hour, or it has to do with completely something else. Just 1 hour is enough time for owners of vaults to top up, right? And enough time for keepers to start their activities, right? To have enough competition, right? Or indeed there is a relation between 1 hour and 1 hour. It's the 1 hour delay is not out of the blue, right? It wasn't set arbitrary, right? It was exactly set because the price feeds update once an hour. Does anyone know?
As far as I can see from previously said, we actually any moment we know the price that will be applied from the next hour. And this means that in current moment you can check whether your vault is under collateralized or not. And you will have until the next price will be applied to the system. You have this 1 hour
okay
to top up your vault or not.
So it seems like they're related, and 1 hour delay is the 1 hour price feed update frequency, right? And the price will be confirmed an hour later, right, with the next update.
Yes,
right?
yes,
And that moment the old price becomes validated, kind of second confirmation, right? Indeed the price is such and it can be liquidated, right? And that 1 hour
yes, something
by
like
the way is a byproduct that, okay, now you have 1 hour to top up, because still not sure, system is still not sure if you should be liquidated, right?
It's not exactly that system is not sure. It's about the actual price that will be applied after an hour. And as soon as this price is applied and the system is updated, its state, you can immediately start auction.
Okay,
But,
do you know as to why not? Okay, price came in, right? Why should we wait for the new price to replace the old price?
It's an approach of maker. They have they feed current price that currently is applied to the system and the next one which will be applied after an hour. Maybe there is an idea to motivate, to stimulate vault holders to top up their vault, or keepers to be ready, to be prepared for the possible auction.
Okay, can you share the link to this to documentation with this old price, new price? And I think I'm done with my questions, and basically that these are the only 3 areas that I have identified, and they're a bit interrelated.
I guess Manuel has already shared it in the chat.
Okay, all right. So summary of that is that to report on progress, the list of risks is more or less complete. The scoring for each identified risk is in progress, about 50% complete. The mitigation treatments, 50%. The hard part would be the basically these risk oracles, right? How to do like exactly what to watch in mempool and maybe wartime, peacetime, you know, and adjust allocations. And finally, I found reviewed the MakerDAO risk model that was shared on the community meeting by Cyrus, the head of risk at Maker. I would like to decompose that risk framework and see if we can adopt some of the elements of it from their approach to our approach, and with the goal to make the risk framework for the keeper pool stronger and solidify the inputs, outputs, and how basically we gonna manage the risk, which of these risks result in mitigation strategies, right, that are set by governance, like to identify these items, right, the red ones, the blue and the yellowish, right, kind of to break down our risk framework into actions, and have some actions like bug bounties, audits, right, but these are separate. Here, objective would be to determine and clarify the inputs, outputs for the system. So that's the approach. What I would propose to improve the risk framework. Any comments, questions, or recommendations? What our inputs? What could be the green, the red, and the yellow for the keeper pool? Here's, for example, the question. Does anyone have an idea? Examples of a green, red, yellow.
I guess it's hard to come up immediately. I guess we need some time to think, because it's kind of complicated, but I'm pretty sure it's obviously possible to come up with some ideas. But
John?
John said he had to go.
Okay, got it. All right, great. Then I'm done. Thank you. I'm stopping my screen share.
Okay, I guess we are at the end of our agenda. So as the next steps, we are moving through the phase 0 and phase 1, as we discussed earlier, and we will share our progress directly in 1 week, and also we'll share all the documentation we provided as for a roadmap and architecture. So maybe if you come up with other ideas, you can directly provide your thoughts in the docs. So I guess that's pretty it. If anyone has any questions, you can ask. Okay, and as the last point, I'd like to say we are planning to conduct personal interviews to design our user experience as much better as it's possible. So I'll provide my contact. We'll accept requests and making a list of the interviewees. So if you'd like to participate and enhance user experience of DeFi products, I'll be glad to hear your voice. Yeah, I guess that's all. Thank you everyone, guys, for joining. We highly appreciated your time. We all understand that everyone has its own projects and its own business. So yeah, thank you. If you're not in a Telegram group, feel free to join and keep the progress there as well.
Okay. By the way, Vadim, you mentioned the user interview, right? Can you basically? I have a question for those who are. I've seen some drafts. Question for Andrew, for Nicholas for 1999 Matrix. Have you guys seen the UI, and would you like to check it out? How it will allow the pool additions, withdrawals, any interest in that as a kind of user experience inspection? Would you like to take up on the call that which Vadim is inviting?
Yeah, okay, Andrew. And I also sent some personal message sent to me privately. Yeah, okay. Thank you, Andrew, for your interest. We already had a good talk the previous week, so, and I've seen your comments in risk document. So yeah.
Yes. By the way, yeah, Andrew, thank you very much as well.
Yeah. We'll contact you, yes, in the nearest days. So it will be great to have a personal talk and to hear your opinion, considering that you already had some conversation with keepers. So it will be great to hear your feedback, and everyone else, for sure. Okay, if there are now any other questions, thanks again for your participation, and see ya the next week and in the chat.